Hey guys, and welcome back to a new Accumulation Zone trade recap. In today's video I'm gonna be recapping my 3 trades I took today on ES1, that's the S&P 500 E-mini futures contract by the Chicago Mercantile Exchange, CME. And yeah, today I'm gonna be showing you because I did not look at the charts in the morning, I did not see any of the London price action prior to I think 9 a.m. New York local time. So I quickly got to the charts and started to look at a higher time frame, wondering if we're still inside this higher time frame consolidation, basically the sideways market with pumps and dumps, now dumping, pumping right back up. And I spotted, for all the smart money concept traders, I spotted a 4-hour fair value gap right up here between this candle's low and this candle's high. We had a gap where this 4-hour candle just broke down basically, and it left a fair value gap. That's what smart money traders call this area, a fair value gap, where price likes to come back to and then reverse, basically fill some outstanding orders. We also had our previous day high from Thursday sitting right here, so we have buy side liquidity also sitting right above this candle here and also above this one. But right here there's also the 4-hour fair value gap right on top of it. So I saw the possibility of this thing reversing right up here with a stop loss that would have been set right around here if we trade on a higher time frame. If you're a higher time frame trader, you'd, for example, next step would be, after seeing all this, before I'm switching time frames, I want to show you how the Scalper Pro is currently in a squeeze. We are in a squeeze for 1, 2, 3, currently 4 days. All this is squeezing price action on the Scalper Pro, so we're waiting for some volatility to happen. We might not gonna see it today on Friday, but we very likely will see it next week, and I'm really excited to see this volatility play out. We also have our stochastic RSI that is pretty much overbought, and that's about to cross over bearish. So let's see how this last daily 4-hour candle is closing. Let's break it down to the 1-hour time frame. So now, if you are a higher time frame trader, for example 1-hour time frame, you could have entered with the opening of this next hourly candle. After you see this massive bearish engulfing, you're placing your stop loss right here. You could also place it on top of the candle that created the fair value gap, which would be right here, if you like to give it a little bit more wiggle room. But because this is such a bearish, super bearish candle, we're not gonna worry about putting our stop loss too high, and we're just focusing on I'd say take it down right till here for a 2.43 risk reward trade from the previous day high, grabbing the liquidity all the way down to the previous day low. So we'll find out what's going to happen. But what I did not trade on a higher time frame. I checked it out on a 15-minute time frame. Let me actually get rid of orders for a second. Settings, visibility, hours. Yep, we don't want to see it on a minutes time frame. We want to see it from 1 to 5 minutes. Okay, very nice. So our previous day high sitting right here, we went a little bit above it, consolidated, and had this bearish engulfing right here. I traded on a 1-minute time frame because I wanted to see what pattern is emerging right above this buy side liquidity, above the previous day high, and also what's happening inside this 4-hour higher time frame fair value gap. So I waited. I got to the charts right around this 1-minute candle. That's when I got to the charts. So it was a good call. I did not have enough time to think about it. That's perhaps another good reason why this trade, or those 3 trades here, were playing out perfectly. So first thing I saw is that we made higher highs. We broke out. We consolidated, formed a bull flag, broke out again, consolidation, continuation, and now above this previous daily high, we are forming a similar bull flag as we did here. Let me actually mark it up. Oh, that's not very good, but you get the point. Bull flag, and then another bigger bull flag right here that we broke out of, but without much volume, actually no volume at all. So now I marked up this high and I see, okay, it's touching it, so I see we formed equal highs right here, a beautiful double top pattern, or a higher time frame M formation that has been retested before fully breaking structure. Let me actually remove that last bit because I don't, you get the point. A beautiful M pattern, M formation. You could also call it a head and shoulder pattern, with this being the left shoulder, your head, and your right shoulder. It's not a perfect head and shoulder pattern, but I guess it would count. So we saw a lack of volume to get price back above this high right at 830 high. Let's call it the 830 high. So we had 830 news. We formed this bull flag, continued to the upside again, but again, we did not break out. So that's a very good indication that this market wants to reverse. Then, checking the Scalper Pro, we are already inside the bigger picture bands, which are reversal zones. They can be treated as extreme overbought or oversold conditions. So we peaked right into here at our 830 high, and then we formed lower highs. So the strength of the S&P 500 E-mini future contract is lacking, and this is basically the volume that did not get put into the market to fill enough buy orders to be basically stronger than all the bears currently on the market or in the market. So what do we get? Right here at 908, we formed this massive bearish candle, and we formed our first change of character for all the smart money concept traders. So from now on, I knew I'm only gonna take this thing short. We had the change of character confirmed, very easy. A change of character is if you're forming constantly higher highs and higher lows and higher highs and higher lows and higher highs and higher lows, and the first time you're breaking the most recent higher low within a uptrend, that's your change of character, because then we're breaking from bullish market structure into bearish market structure. Leave a comment in the comment section below if you want to see another video just about change of characters and basic market structure. So from on here, I knew we are in a downtrend. So on a 1 minute time frame, I spotted this 1 minute fair value gap right here from this candle's low to this candle's high. We had a gap in here that's right above, basically right around the previous day high. So what did we get? We broke out to the downside, had our change of character, we pulled back, and what happened? Right above the previous daily high, we had a massive bearish engulfing candle. Beautiful setup, very beautiful setup outside of this fair value gap, confirming this whole idea. Yep, and we did not close below the 144 EMA, neither the VWAP, but I still took this trade because everything was lining up. We broke below it, but we pulled back up. What did I do? I didn't enter with a 4% risk, I only entered with 0.5, because this is not matching all the rules, but pretty much 95% of the rules. So the next thing is we had a bearish Scalper Pro, basically a retest of our average here on the Scalper Pro, and the stochastic RSI is crossing over bearish in the overbought area. So we had this previous bearish divergence with our change of character pulling back into a fair value gap above the previous day high, where most of the volume is being trapped long. Massive bearish engulfing candle, stochastic crossover, Scalper Pro retesting, breaking down bearish. In my opinion, it's a no-brainer. The confluence is all pointing in that direction, and I took a quick 2-to-1 risk-reward trade with my stop loss a little bit above the fair value gap, right here actually at the high of this candle that created the fair value gap, for a 24 tick stop loss, a 6-point stop loss here on a future indice chart. 2-to-1 risk reward pretty quickly, and this was also the New York Open candle. So right at 9:30, they moved this market down with this bearish engulfing candle. This is a market open candle, and I'm jumping onto this movement and this momentum. So that's when 15-minute traders also get into the market right at 9:30. It's a second 15-minute candle close within the 9 o'clock hourly candle. So what did we do again? We cross over bullish, letting the market cool off. But even though we had a pullback on the stochastic RSI back into the overbought territory, we did not get anything similar on the Scalper Pro. So we know we're losing steam, and we also went down the whole time while the stochastic RSI was cooling off. So we crossed over bearish again, right on this candle with this little arrow to the downside marked up. The Scalper Pro is still bearish. We engulfed this previous bullish engulfing candle with this pin bar and doji. Engulfed it, I went short with a stop loss of 20 ticks or 5 points, right here on this candle's high. We broke down eventually, had a bullish crossover, and we had 2 pin formations being formed here. We pulled back right very close to my stop loss because I'm using AMP as my futures broker, I can very easily trade here on TradingView and yeah, order my executions. And with AMP futures there's no big spread, so basically no spread at all. So I think it ran 17 ticks or 16 picks into drawdown before then forming this little doji or inverted hammer, pin bar, and continuation to the downside. And what happened right here on this pin bar? Stochastic RSI crossover. The confluence is consistently there. Now we are below the 144 EMA on this entry and this entry. We have even a smaller stop loss, so the potential to take this thing to this 2-to-1 risk reward take profit is actually a 3.29 risk reward. But because I already won this trade, I also did not risk a full percent. I risked 0.5% on each trade because, yeah, I don't know. Even if I would have lost both trades, I would end up with 1% net profit. And I think, in my opinion, that's all I need per day. 1% profit per day equals to a 30x net profit over the whole year. Trading from Monday to Friday, no weekends. Very simple. Right now, we formed a little wedge to the upside, a little consolidation, perhaps a distribution. We broke it down again below our lowest point here. So we formed a new lower low with a bullish stochastic RSI crossover and a reversal opportunity right here on the Scalper Pro. We broke out outside the Scalper bands, touched the bullish reversal zone, and reversed right back into the band. So we also had a bullish engulfing candle. Right on this candle would have been a very nice entry to take it long. I'm already done for the day, but if you're not, you can still continue. There's plenty of time to take beautiful setups like this. Simple 2-to-1 risk reward ratio, taking it up to the most current high. So in case we are breaking this high, we are forming a bullish change of character. Let me go back to the chart. If we break this high, we are at a bullish change of character. And then we could be looking for a Fibonacci pullback right here somewhere into, let me pull up my template, right here into the optimum trade entry, somewhere around here. Then we check our indicators for some signals, maybe a divergence or a bullish stochastic RSI, and we will find out we could be forming some sort of a inverted head and shoulder pattern to take this thing back up. Sorry for my drawing skills, they're really not that good. We will find out what's happening because this is a rather strong bounce, so we will find out if this is just a trap or if this actually turns out to be a reversal pattern. Only time will tell. Alright guys, that's it for my S&P 500 analysis today. I hope you enjoyed watching this video. If you did, make sure to give it a like and subscribe to my YouTube channel. This really helps me out a lot to grow with the community And if you haven't already, make sure to join our Telegram group and our Discord server to stay up to date all the time. Take care, guys, and I'll see you next time.